I'm extremely happy to be with you, virtually though, for this 2-hour CP program on standards and auditing. Ramu sir has already laid down, quoting my dear friend Sripriya, the importance of auditing standards and the importance of documentation. It's something which many of us are taking a little passively, diligence and negligence. I think some of us are in between. And today, the institute, particularly the leadership, whenever you interact with central council members from the south or even other regions, two things are being insisted upon. Two things are being given a new thrust. One is standards and auditing. The reasons will unfold as we go by through this presentation. I have a PowerPoint presentation which I can share with you. But then, if you are jotting down, it will help you register these points. It will be very effective. The other topic is code of ethics. This goes together. Code of ethics, that there's a reference to SQC1, Standard and Quality Control 1, about which we are going to discuss today. So Code of Ethics, the new Code of Ethics is mandatory. Code of Ethics 2019 is mandatory from 1st July 2020. Yeah, we are in the first month of its applicability. Originally slated to be made effective from 1st April. Now it is 1st July. It is already in place. I'm sure that the branches are directed to organize programs on Code of Ethics as well. So this is the introduction with which I thought we will start this program. My big thank you to all the three branch chairman, and also to Jalapati for referring my name. And we would soon be doing. I'm addressing Belgaum this next weekend in between Mangalore. Many of the branches we have addressed on this topic: company audit, accounting standards, and the like. So with that introduction, let me move on, trying to share the slide. Is it visible? No, I don't think so.
Visible, sir?
Good in, sir.
That will come.
Yeah. Okay,
now visible, sir. Yes, sir. Okay, sir.
Yeah. So all the three branches, 18th July, we are here together. Standards on quality control and auditing and update. Before we go into that, 2 minutes on the very basic aspects of audit. Today, audit quality issues are being reported. So we ask, what is an audit? How is an audit? Why is an audit, and how an audit has to be done? Audit is defined to be an independent examination, underline independent examination of financial information to express an opinion on the financial information. Now, general purpose financial statements will include the balance sheet, the profit and loss account, and cash flow statements. Section 2, subsection 40 of the Companies Act 2013 defines financial statements to include cash flow statements also. For all companies other than small companies, dormant companies, OPCs, and startups have to prepare cash flow statements also. And the auditor has to give his opinion on the cash flow also. So this is what an audit is. Why do we do audit? Is because the financial statements. Let us elevate our thinking to a larger corporation, a corporate entity. We are doing the audit of a larger corporate entity. So the financial statements prepared by the management is given out to multiplicity of users, stakeholders, from the government to the banking system, going up to academics, creditors, shareholders, all investors, intending investors, all these capital market operators. So they have to be reliable and comparable. So before that is sent out to the public, it is put to an examination by an independent, impartial, trained professional, a chartered accountant who is appointed as auditor of the company. With that stamp of acceptance, with his opinion only, how good that is, if the financial statements are sent out. Alongside that, today we have additional reporting requirements under the Companies Act, Section 143. Then we have CARO. CARO again emanating from 143. CARO 2020, the applicability is deferred to next year. This year, 1920, we are reporting under CARO 2016 only. I hope that is clear with you. That is the importance of an audit. Why? And how to do an audit properly. This is a big question which is being asked when there is some problem. In Yes Bank or in ILNFS, when the disciplinary proceedings or action taken by governmental authorities and the institute takes place. The question is, have you done the audit properly? Very simple. Have you done the audit properly? And how have you done it? So how to do an audit is very clearly laid down in standards on auditing. We have so many of the standards on auditing. In that, there's a broad category. So this is the introduction which particularly younger members I thought I should share with, and that's how we'll take off the presentation. Am I audible? Is it clear enough, sir?
Sir.
Clear, one sir. Can say, clear enough. Can I move forward?
Yes, sir.
Okay. Now, before that, again, very simple, 2 more slides on the basic aspects of touching upon some of the audit processes, which many of us are not doing in the given situation. Audit in most of the cases have been reduced to a compilation. Client will give a trial balance, sometimes the tally data. Today they share the tally data in this COVID affected environment where we are physically not able to go. And the students may have the client's tally data in their laptops. So based on that, we take a trial balance and help the client prepare the balance sheet and profit and loss account. And of course, the tax computation. That is the most important thing. Audit is mostly done, people say that audit is mostly done to file the tax return. It should not be the case. And based on that, we will prepare the auditor's report, everything, and then do the whole thing. But then there are a lot of audit considerations which are very, very important. And in properly doing an audit, we should be doing. Opening balance checking, particularly in the first year when we are doing the audit, we have to be very, very careful in dealing with the opening balances. Whether the balances are maintainable, whether those balances are really there. We recently had a new audit, took up a new audit, where we found that there is close to 12 crores in the land account. We asked for the breakup. It is not there in the fixed assets register. So we asked for the breakup. It was audited 3 years by another firm. They resigned and we were appointed. And that is also very important. Make sure that your appointment is proper. Under the new Companies Act 2013, we will be mostly focusing on the corporate audit scenario. Under the new Companies Act 2013, the auditor is appointed for a period of 5 years. Not for 1 year like in the earlier act. So unless he resigns and an ADT3 is filed, and unless the EGM is held and we are appointed, we should not take up the audit. The auditor cannot be removed by the management. One has to be very clear on that. We are seeing a lot of cases. In the last 2 months, 2 cases came to me for, one is for mediation. The other one is for taking a disciplinary action against an audit firm which took up the assignment without completing this. Of course, we have to write them all that. And do insist on an appointment letter. And also get the copy of the resolution. If it's the first appointment, the board resolution. Otherwise, the general body resolution. But has to obtain. The host can mute everyone else. So we'll have a Q&A session because there is some background disturbance. Request the host to mute everyone.
Done, sir.
Okay, thank you. So coming back to this opening balance checking, so we asked this company, we asked for the breakup. We asked for the originals of the title deeds. The company doesn't have a loan. It's a cash-rich company. Promoter himself, no, somebody else's female voice is coming up. Request the participants to mute. Okay. So we asked for the breakup of the land. Then they are saying that it is given to the village for land was purchased in 1718. It is given to the village for we call it Pokuvaram in Malayalam. So the documentation, changing of the name of the owner and all that from the register. It's not in the registrar's office. It's given to the village. So the audit is still on. We are waiting for that to happen. So we have to see whether there is any issue with that. So that kind of situations, opening balances have to be carefully checked. Receivables going forward, all that's very, very important. Internal control evaluation. Now again, another thing I'm seeing in smaller towns like Ernakulam or Tirupur or Salem, I think slightly bigger, and Erode, many of our members are very closely associated with the sales tax practitioners. STPs, now they are into GST also. And they bring a lot of stuff. They will not let you know the client. And client KYC is very, very important. Every client of yours you should have met. You should have a KYC form filled up. You should have met. If it's a company, the director's details should be obtained. It should be in the file, and there should be a direct link, direct connect with the client. It should not be through an intermediary. And in our office, it's a complete no entry for all these non-professionals. We used to take the help of one particular person for permit issues. Now that GST e-way bill and all this there, that is not there. In the earlier KGST and VAT regime, we used to help. That is also not there. So these fellows, we have to deal with them carefully. Let them refer clients. There is no issue. Let them take their fees. We will meet the client. We will get all the details required. That suitcase bringing of balance sheets should be completely stopped. Now, the internal control evaluation is something which in larger organizations, before we do the audit, younger members and students would know there's something called the compliance procedures. Before we start an audit, what are the internal controls? Who are the people in charge? What are the controls? Financial reporting, MIS, bank reconciliation, all those things, internal to inventory controls, receivables management, all that we have to evaluate, and the findings should be communicated with the management. SA 260 very clearly requires that. We will come to that a little later. Vouching. Are we doing vouching now? If all of us are doing, it's fine. Otherwise, some vouching is the essence of auditing. It said that source documents have to be verified. Who has authorized the transaction? Is the transaction relevant to the business, or is it a personal expenditure or something which is not relating to the business of the entity? Some mischief is there. Vouching is very important. 20, 25, 30% vouching should be done in every audit. Ledger analysis. Now technology is there. People say that we have the tally data, but it is very easy to do a ledger analysis with your laptop on, like we are doing now. Most of us are on the laptop. Maybe some of us are on the phone. So we can do that. And alongside that, you have an Excel sheet. The notes you don't have to even write down. Just make the notes. That is the way in some cases we have done. So ledger analysis reminds me of something. Our dear friend Ganesh Balakrishnan, who is a managing partner of a big firm in Hyderabad, he's told me that Jomon, now I'm finding a lot of charm in what some of our very seniors did, even keeping copies of some ledger accounts, major ledger accounts. With the closing, in those days, it was manually written. I'm seeing a lot of senior members here. You would know that stamping of the closing balance. Finally, it will be inked and stamped the closing balance. These are age-old practices in the technological era that we are in. Digitally doing everything, this may sound very old-fashioned. The point here is to say that ledger balances have to be finalized after all the closing entries, and we should have a final trial balance signed by a senior finance person from the organization. That has to be there, a hard copy. Insist on a hard copy. That much has to be there. That is not old-fashioned. That is a very basic requirement. Verification of assets and liabilities, documents. Now, for this case, I'm sure that the previous auditor, not to find fault with him, the previous auditor had not asked for the originals of the title deeds. 12 crores of balance, which is fully funded by promoters' own funds, but then we should see the document. And in the CARO, we are used to reporting whether immobile property shown in the balance sheet of the company are registered in the name of the company. Initially, I thought, what is this requirement? Because this is very basic. But 3-4 years back, we did an investigation for the official liquidator's office for a Kerala company, where we found that it was audited by a very senior chartered accountant. He is no more. Who was audited by, and 18 of the properties, that company went into all kinds of trouble. 18 of the high value properties shown in the balance sheet were in the name of the managing director and his wife. Some jointly with his wife, some in the name of the managing director, without even mentioning the company for address purpose. So that kind of verification we have to make sure. There's a lot of complaints about the audit quality and all those things. I'm coming to that a little later. So when we sit together in large numbers, members of 3 branches gathered here, I'm fortunate to be in your midst for this interaction. So these are basic things which every one of us should not forget and continue to do with a lot of involvement and commitment. Comparing financial statements with books of accounts. Now that's very important. When I mentioned the trial balance is the link between the books of account and financial statements. Maybe we prepare the financial statements for our clients. Students sometimes say that, sir, audit is almost over, statements have been prepared. We are doing it as an extra help to the client. We are not supposed to do it actually. Some smaller clients, we help them. We ask the students to do it because the balance sheet has to be Schedule 3 compliant, should comply with accounting standards. All the disclosures should be there. Deferred taxation has to be there. All accounting standards. So some of the smaller clients, medium clients, most of us in these 3 towns and in Ernakulam, we do not have many large listed companies. We have smaller companies, medium-sized corporates where they will need support. Let us do it, but that should not take away the focus of the audit. Accounting standard compliance, Schedule 3 compliance, and collecting information for notes on accounts. Lot of information is required under the Schedule 3, detailed disclosures. So we have to get it. Analytical review is something ratio analysis, trend analysis, depending on the industry. We may have same clients in the same industry, 3-4 clients. We have confidentiality of information, but for our internal purpose, we can compare how they are fared, what is the GP ratio, industry. Today, internet will give you a plethora of information when you want to do what is the GP or yield ratio or whatever. All these can be compared with online referral making things so easy. Lastly, CARO points, we have to do informed reporting. CARO is a very detailed one. 2020 is bringing in a lot of responsibilities. Even predicting on the future of the company. See, so far it was only hindsight. Now they're asking the auditor to predict the future of the company. So we need a foresight also. That is how things are being levied upon the auditor. One has to be extremely careful. But this year, 1920 audits, we are going to do it under CARO 2016 only. When I was introduced, one thing was not mentioned. Many of you may not know that I did my articles in Chennai from 88 to 91. So I tried to speak some Tamil in between. I hope I'll not spoil the very, very divine language. And I still have a lot of pleasant memories. Those was Ilayaraja days. And we used to have a lot of songs, including Sargame Entralim, Namura Pola Varuma. So those memories are very pleasant. So when I was in Chennai, I speak to Jalapati and DC sometimes. All my Abhishek, all of them tried to speak in Tamil. Last year, when I was in office also with the office team, Parameshwan and all that, whenever possible, used to communicate in Tamil. So, CARO informed reporting we have to do. We have to collect all that. This was about the audit process. Now, quickly on the evolution of auditing standards. Auditing Practices Committee was set up in 1982. Institute was set up in 1949. 1977, we started formulating accounting standards. 5 years later, 82, we started formulating standards, statements on standard auditing practice, SAPs they were called. Seniors will know. In AISB, it was renamed. The board was renamed as, Auditing Practice Committee was renamed as AISB, Auditing and Assurance Standards Board, 2002. After that, they started issuing AIS, Auditing and Assurance Standards. 2005, in my introduction, it was said that 2005, I could serve the board. When Manoharan sir became vice president, he co-opted me to the board. I was not holding a regional office or a branch office. I was not holding any position. So I could attend all the 12 meetings of the board. The last one was in all the meetings were in Delhi, except the last, which was in Mumbai. We could interact with Graham Ward, the then president of IFAC. That time, Amarjit Chopra sir, who later became president of ICAI, was the chairman of AISB. AISB, the name continues, but in 2008, they issued a new preface. Preface in 2008. With that preface, now the auditing standards or standards on auditing, review, and engagements are now broadly classified into SQCs and engagement standards. SQC is standard on quality control. They have issued only one standard, SQC 1. Let me quickly finish that and then we'll move on to engagement standard. So how do we bring quality into an audit? So how do we bring quality into an audit? The answer is we should have a culture, or rather a mission or a vision statement stating that it should become part of the work culture, saying that we will do audits with good quality. We will do all the exercises which are expected of the auditor, and then based on that only we'll issue an informed opinion about the financial statements. And an opinion about the financial statements is comparable or is almost like giving an opinion about a person. It could be a marriage proposal, it could be a business association, partnership. So we are sometimes asked, how is that person? Or how is that girl who did articles with you 3 years back? There's a proposal for my nephew or my son. Some of your friends might ask. So we need information, we need evidence. So we also tell them that this girl was with us over the 3 years from 2015 to 2018. Those 3 years. Before that and after that, we do not know. During that time, she was found to be okay. She did not qualify. Sometimes we say that she is very brilliant, and sometimes we say she's not a team player, but otherwise, then okay. So clean sheet, adverse opinion, qualified opinion, then disclaimer also. Sometimes we say, it's better that I don't opine about her. That's a disclaimer. Washing off our hands. So that can also happen. So SQC 1 is to have that kind of resolve that we will do all that is required and issue only high quality financial statements from our, we should pass the QC test, quality control test. When I'm training the peer reviewers, I ask this question. The second aspect is to have good processes in discharging the audit. What are the processes in discharging an audit? These processes are what we are going to discuss now. Standards in auditing is what the processes are laid down. That is where we have the processes. The third one is to have a good team of people. Many of the firms today are not able to grow, not able to deliver properly because they are not fully tech savvy. They do not have the infrastructure. And unfortunately, many of our senior members do not have a young team. I respect and salute the seniority of our members. It is important that there has to be a mix of seniors and juniors, old and young in every firm. That wisdom of the seniors have to be blunted with the new tech capabilities of the new generation. So that's very, very important. That's very important that we do it. So one is a result about the quality. Two is about the processes. Say, for example, process, let me say one thing. Do we have an audit program? If it is not there, make a result today. In larger audits, I will have an audit program. The assistants will duly fill it up. I will review it regularly. These are things which some of us are doing, some of us are not. So we have to do that. So that is about SQC. The third one is good people. Though they should be attending programs, students should be encouraged to attend CASA programs. Internal training programs have to happen. I have 52 article students in my Ernakulam office and about 20 in Trivandrum. So we have regular fortnightly meetings. Monday mornings we have meeting for them on a topical aspect. The one student is asked to prepare a paper. It could be on GST, it could be on standards in auditing, accounting standards, financial statements, income tax, all those things, amendments, union budget changes. So they are empowered. We are guided. One partner will guide them. So that has to happen. So that is about the SQC 1. Now coming to engagement standards, they are broadly classified into SS, standards on auditing, standards on review engagements. Maybe some of you are doing the limited review. Quarterly, if your securities are, if shares are listed on stock exchange, or BSE or NSE. Half yearly, if debt securities are listed. Review engage, limited review. There we have to comply with the SRE. Next is SAE, standard on assurance engagements, and then is SRS, standard on related services. Here I have to spend a few minutes on this. SRS, I'll start with SRS and SAE and come back to SS. Quickly we'll finish that, then we'll go SS in the right order. Sir, standard on related service is primarily relating to engagements to compile financial information. Non-audit, non-corporate cases. But whereas we see that large number of members are issuing reports without considering this particular aspect. There is no audit required. I'm talking about, let's say, a partnership firm which is a turnover of, let's say, 85 lakhs. Companies Act is not applicable. Income tax, there is no need to get an audit. They sometimes come to us to prepare financial statements for two things. One is tax filing. Balance sheet P&L has to be prepared, then a statement of total income. Second one is they might need a bank facility. So for that, they say the presentable financial statements have to be prepared. The approach is seeking accounting expertise and not auditing expertise. So there, the compilation statement, I'm seeing many of the members issuing reports, balance sheet, writing below that or stating below that, prepared from the books of accounts produced before us and on the basis of information given to us. That is prohibited, sir. That is SRS 4410. You have to sign it to saying refer compilation report. Compilation report, the caption is accountant's report on unaudited financial statement. And subject to audit. Nare reports are being issued. Subject to audit, how can the chartered account say subject to audit sign panna mudiyuma? It is almost like saying that this person is healthy, a doctor said medical certificate. This person is perfectly healthy, subject to blood test, urine test, scan, ECG, etc. etc. We should not do that. This can become misleading. So clients will demand a lot of things. Today, we should also develop that kind of a bit of a resistance based on the regulatory framework that we are in, and develop some kind of a detachment also with the client. That's very important. So SRS 4410 prohibits all these kind of things. It should be only as refer compilation report. SIAE 3400, SIAE, assurance engagement. Another problem which we are seeing is projected financial statements. In a case where they go to the project, they might approach us to prepare some financial projections. Sometimes the management does it and brings to us. Sir, I took this to the bank. Bank says that this has to be signed by the auditor. Can the auditor sign projected financial information? Answer is kind of no, but SIAE 3400 tells us how we can associate our name with the if at all. We don't sign. We have made it a policy not to sign, and non-audit cases we will not sign. If the bank insists, that is SRS 4410 I mentioned. The bank insists, we will say that we will sign with this compilation report. And SIAE 3400 projected financial statements. So the key point here is that issuing reports just because the client wanted subject to audit, prepared from the books of accounts, they are all prohibited now. So standards on auditing, the SRS and SIAE is about that. Review engagements we have discussed. Now we will move to SIAE, standards on auditing. Quickly, why should we comply with standards? To expedite audits effectively in accordance with, in compliance with the gaps, generally accepted auditing practices. Utilize resources, the time factor, the faculties, the students, the people around us, all of them use the resource. Time is a huge resource, very, very valuable resource. Guide and supervise assistants properly. To ensure quality control in an audit. To disprove charges of negligence. To face and pass peer review. Today there was a meeting of the peer review board. The new statement on peer review is being issued. I could not attend it. I was tied up with something. Would really like to look at it. And the peer reviewers now in the new scenario have to pass an exam. Earlier on, it was an empanelment only, with that years of experience what is required. Peer review is very effective. We were trying to get our firm peer reviewed, and it happened last 8 months back. We got the peer review completed and we passed the exam. We got a peer review certificate, which the institute says that is a hallmark of professional excellence. The fact that your processes are mature enough, your firm have certain quality systems, compliance with standards are good, office systems and methods are kind of acceptable. This is what a peer review certificate brings, that fresh credibility to us. But then frankly, to share with you, I was not happy the way we were peer reviewed. Lot of relevant questions which should have been asked were not asked. So we prompted the peer reviewer to look into those areas, to get his views on these things, and then the whole thing happened. Many of us may not pass the peer review, and peer review today is mandatory. If you have to do any certification, anything in the listed space, SEBI has made it mandatory. Audit of listed company made it mandatory that it should be done only by peer review certificate firms, peer reviewed firms. there was a chat. We will see. I think there was a chat on this. That questions, I think we can probably take a little later, but let me see what it is. That's on SRS. Why don't the institute publish a guidance note to users of financial statements wherein they can clearly say that what are the statements a chartered accountant can sign and what other items certificate the CA is not permitted to sign. The ICAI must also circulate this document to all banks and publicize the availability of such a guidance note so that any stakeholder is aware of what he can ask from a CA and what not. Very, very good question. A very good question. Who has posed this question? Venkatesh Prasad, sir. Okay, this is a very relevant, very important point. Institute is belatedly, I would say, belatedly started the process of doing this. Now let us take a detour for 1 minute about the UDIN. UDIN is a very, very brilliant initiative by the institute. It protects us from dubious operators, like I said, sales tax practitioners. Many of them carry the seal and they know how to sign. Our signature also they are capable of forging. Today, we have an OTP controlled UDIN where this cannot be played around with. My signature is fully owned up by technology, and I can, if I have not signed, there are methods of proving, very simple method of proving that it is not somebody has faked and forged my signature. This is where we had to sensitize. So Sir's point is, while we discuss this, maybe 100, 150 of us, I don't know how many participants are there now, not able to see, view the numbers.
180, sir.
Sorry?
180, 180.
That's a good number, sir. Okay. So, while 180 of us are, some of us were aware, some of us are getting a new set of awareness. The end user, the users of financial statements should also be sensitized. So, back here, the institute is now doing that. And I talked about the UDIN. Same way, these kind of things are already published, and every one of us, we cannot expect the leadership to. When a bank manager, I have called so many bank managers saying that we will not sign, and an auditor is not supposed to sign professional financial. We can do our bits also. I am in the institute administration at the regional level. The institute has started the process. That's a very valid point that has to be stressed upon further. We will continue to take it up. And UDIN sensitization has been fairly. We have in IBA, Bankers Association, the Indian Bankers Association, SEBI, CBDT, CBIC, all of them being now sensitized about UDIN. Similarly, these kind of documents, a white paper can be brought out by saying that the auditor cannot be asked to sign professional statements. Unaudited statements should not be signed and all that. Point is well taken, sir. Let me continue. I think we'll continue to interact towards that. Why don't it's okay? That is over. Is there any other chat? No. As of now, no. Okay. Now, back to this peer review. Every one of us should be able to pass this examination. It's not an examination. It is the peer reviewer coming in and asking us to do. Most importantly, above all this, the Companies Act 2013 has made auditing standards mandatory under the Companies Act. Till the 2013 Act came, standards auditing were only publications or pronouncements of the institute with a dictum by the institute on the members that you comply with standards auditing. If you fail, if there is a problem, we can take disciplinary action against you. The whole scene changed with the 2013 Act. And today, let us also be reminded that NFRA is gaining foot. When NFRA gains feet and then starts taking action against professionals, this section is a very, very sharp weapon. 143.9, very simple line. Every auditor, not company, not management, not board of directors, every auditor shall comply with auditing standards. One single line. And the caption of that section, younger members, if you are reading the Companies Act, you should notice powers and duties of auditors and auditing standards. Heading itself, auditing standards, in the name of this section, caption of the section. This is something, it's a very simple line, but a very demanding line, very challenging line for the. And how do we read the Companies Act? If some of you are reading the Companies Act, a day before yesterday, I addressed a program organized by SIRC on the SPICE form. simplified pro forma for incorporating company electronically, where I told the members who came online, I requested them, I urged them to get back into corporate law practice. We have plunged into the company secretaries, company incorporation, annual filing of documents. Of course, there are certain restrictions under Section 144, where we are auditors. There are certain restrictions, but we can do for other corporate clients. We render the whole government of corporate law service. We have a partner who is specializing in corporate law, FEMA and all that. Moving forward, we should specialize also. A firm with, let's say, 5-6 partners. Why should everyone learn GST? Why should everyone learn income tax? Why should everyone listen to the budget? Budget presentation, of course, is different. And finance minister is Namma Ure Ala. Except for that, I don't think everyone should learn everything. Going forward, specialization is the key. Technology, everyone has to be savvy. So there can be a tax partner, there can be a compliance partner, there can be indirect tax partner. Very importantly, we have a GST partner is there. And senior partner, if you're a senior partner, you don't have to do anything. You just coordinate, goes around in lighter way. So Companies Act 23rd, Companies Act, how do we read the Companies Act is, don't buy any books. For procedures, you can buy sometimes. Otherwise, it is the e-book, which is e-reading has come of age. E-reading, newer generation, they have a Kindle, they have the tablet, tab, all that they will, just browse and all that. In the flights and in the trains you used to travel, now we are not able to travel. A lot of people doing this e-reading. So the best reference of the Companies Act 2013 is you visit MCA website, www.mca.gov, gov for government, gov.in. On the left-hand side, you will see the e-book, the Companies Act 2013. That is the latest version of the Companies Act, updated very regularly and maintained by ICSI, Company Secretaries Institute. And that is the best reference point. Students also, Companies Act changes when they come, examination point of view, they should refer to that relevant section. So these are the important aspects which tells us that standards auditing are very important, not only important, mandatory under the Companies Act. Look at this very unfortunate comment made by the MCA secretary. We do not expect the auditors to see the needle in a haystack, but they must see the elephant in the room. This has made news. July 1st, Business Line ran an editorial. I don't know whether you have read that or not. It was about the contemporary CA, how the profession should gear up for the future. The crux of the article is that accounting and auditing, which original our domain, even taxation to that extent. Now we are going into faceless assessment. The seniority which many of us have, or many of the members, even income tax officers would stand up when you enter the room. Sir, Vanga, he'll offer a cup of tea, make comfortable. Only and after that, and he takes your word for granted. So that is all fine. That kind of familiarity is not going to help. Seniority for tax assessment will become, unfortunately, a thing of the past. Tirupur assessments may be happening in Jaipur. Delhi assessments may be happening in Cochin. Coimbatore assessments may be happening in Gujarat. So that's the way things are going. So the article says that accounting, auditing, and our existing domains can only be one of the arrows in the quiver that we carry and cannot be the only arrow. Essentially, we need to transform, change, and take into new areas. Insolvency, for example. Feasibility reports, new areas. One of my partners, this compliance partner, he is qualified IB, this insolvency professional, and we are getting a lot of assignments now in newer areas. So this comment is very unfortunate. And that particular article, the editorial of the Business Line, the last paragraph started by saying the elephant in the room is making its own rounds. It was referring to this particular statement. So this is a shame for the profession. We have to be extremely careful. We cannot be passive. As my friend said, this diligence, negligence Negligence can be very, very expensive. Individually for us, we can be taken to task. Collectively for the future of the profession. Many of our kids, my daughter is doing CA, so they are the future of the profession. We should not do anything that dilutes the quality and the integrity and credibility of the profession. So that means that we have to do things properly. With that, compliance with standards and auditing. We will quickly look at some of the practice-based standards. SA 200, sir, is the first standard. I'll call it a runway of the essays from which we take off to other standards. It says that the audit should be done properly. Evidence collect panno, nalla document panno, all those things is mentioned in there. So integrity, independence, confidentiality of professional information, all those things are there. But 2008 preface, when they included a new item. First time, belatedly, professional skepticism. Before I forget, let me tell you, the Institute has come out with 6 COVID-related pronouncements. I hope all of you have seen those pronouncements. We are going to discuss, touch upon that, run through that towards the end of this presentation. 6 presentations from 27th March to 18th May, if I remember correctly. First one was Accounting and Auditing Advisory, issued jointly by the ASB and ASB. There, in all these standards, if the 6 pronouncements, they say that in a COVID situation, your professional skepticism should stand amplified from an audit point of view. From a business advisory standpoint, maybe we take a different stand. But as auditors, when things are going from bad to worse, some of the businesses have hit the wall and they're not able to go forward. Going concern may be at stake. Inventories would have deteriorated in quality. Orders may not be there. Existing debtors may not pay. Situation is grim and bad, probably worse than what we actually think. So therefore, SA 200, the important point is that they say that standard overall objectives of the independent audit and conduct of an audit in accordance with SAS. So when we talk about evidence, it says that sufficient appropriate evidence should be collected. Sufficient appropriate evidence should be collected. Sufficient is quantity. Appropriate is relevant. You say that you have 3 thick box files of audit documentation. What is that in that you have relevant information? So sufficient appropriate evidence. This is one of the requirements of SA 200. That is explained in SA 500, audit evidence, standard. How this has to be actually executed. It says the SA 200 says audit should be documented proper. SA 230 tells us how to document the audit work. Audit should be planned properly, very important. SA 300, audit planning. That is about the takeoff standard, SA 200. SA 210 are very important standard. So SA 200, what is the takeaway or what is the action point? That I will comply with standards on auditing. I will exercise professional skepticism wherever required. There's a biblical term called doubting Thomas. He will only touch, feel, and then believe. So some of us are in some situations, there is no harm being a doubting Thomas. So that's where professional skepticism. What is the skepticism is that younger members should know. You go for an audit, you see senior person, 60 years or 30 years experience, a chartered accountant, is a finance manager or director of finance. That's fine. We respect him for that. But then certain statements which he may put forward or documents which may share, we will have to have this kind of an attitude which you don't have to expressly say, sir, that's fine, we trust you, but we will still like to verify. It is also having a kind of work culture that we do not take people explanation and documents for granted. There are fraudsters everywhere. Self-interest leads to a lot of issues. Why is that the MCA secretary made such a comment? Why is that corporate, in every corporate failure, our professionals are found fault with? Aligning too much with the management, not asking relevant questions. So SA 210 is that after getting the appointment letter, the auditor should insist on getting a letter of engagement. The format is given as an appendix to SA 210. We call it LOE in our office, letter of engagement. And no audit starts before getting the LOE signed by the director of finance level or a senior finance person. If it's a partnership firm, sometimes we insist on the partner signing. Also discuss the fees and finalize before you get started. We are very reluctant to ask fees. We are reluctant to collect. I always say, ours is the only profession which gives 12 months of free credit. There was a strict auditor. I was told that he's a very strict auditor. Last year's, only after getting last year's fees, he will start this year's audit. So which means a 12 months free credit. Even in the banking or from a health standpoint of receivables, what is more than 3 months is not healthy. And today in COVID situation, one of the COVID lessons I would like to share with you, when this lockdown happened, we partners met again on Zoom and discussed how are we going forward? Do we have the reserves for 2 to 3 months? What are the works that we can execute? How much have we leveraged on technology? Can we sitting at our residences, students sitting at various places of Kerala, whether we'll be able to do the work? So one is whether we have the reserves. If not, we had reasonably, okay, I'm striking a personal note here, but it is very relevant, I think, in this context. Then do you have the technology? Is the server a cloud server, or we are not able to access it? You have to go to office. Still, we could manage going to office is okay, but some of the clients were not willing to, receive the students when 3 or 4 students go for an audit and all that. So whether we technologically leveraged was a big question. Whether we had the reserves, and we also asked how much are our receivables. As on, let's say, the 20th March, if we had huge receivables, then collection becomes a huge problem. We have a completely different culture. We do not give credit. One-time assignments, no credit. Audits also, undue credit is not there, maximum 1 month. But with that, our receivables were under control. But let me tell you, even what was receivable as on that particular date, some of them are still not collected. It's coming in installments. See, tourism industry, for example, resort clients, they're fully closed. They have retrenched staff. Electricity bills have, I think that has happened in Tamil Nadu also. Kerala, they took an average and gave a big bill electricity during the lockdown period. So how do we think that we can ask them for payment? So these are COVID lessons. So in the audit engagement letter itself, fix the fees. And I have heard many of our senior colleagues in Kerala also, you say that Jomon, some of our clients are from those days. Our founder partner, who is no more, I did articles under him, and we cannot ask them for quick payment and all that. I said, that's fine, sir. With existing clients, if at all there is something, but if a new client is coming to us, therefore, we are not going to the client is coming to us. So we can surely in the first meeting, Kandipa meet Ponno, and the client should come to office at least once, even if it's a big client. So with that, we discuss and tell them what we are. In that, infrastructure is important. Many of our offices are in suboptimal conditions. We spend a lot of money on our houses, luxury cars, but office is where we spend the maximum amount of waking time. At home, we are when we are there, it's a sleep time most of the time. Morning and evening, we spend some time in between, or we go for lunch. Some of us go for lunch home, and then otherwise, with the waking hours, majority spent in office. Good infrastructure. T. Sharavanan is requesting to annotate the shared content. During annotation, you cannot control the shared content until you stop annotating. I am not able to understand the request. Can Mr. Sharavanan unmute and speak up? Okay. So these are very basic things, but we are still reluctant to ask. We are yielding too much to the client. That cannot happen. So the action point in SA 210 is I will insist on getting a letter of engagement from the client before we starting the work and have a discussion with the client. So SA 220 is, of course, there is an overlap. It is quality control. This should not have been here because we have another set of SQCs. SQC 1 is more or less, SA 220 are more or less the same. Resolved to have quality, good processes, good people. And today I would say the best possible technology also, which can reduce a lot of, we used to call this donkey's job kind of things can be substantially reduced. SA 230, sir, documentation, audit documentation. The audit documentation should be sufficient to establish that we have done the audit properly in accordance with standards on auditing. This is the crux of the standard. The new standard does not talk about permanent file and current file. Earlier it was there, but I think it's a very good practice to have permanent documents in one file, working notes, and we call it in our office, we call it main file and working notes file. So documentation should be proper, all that confirmations, the communication which has happened, notes, registry scrutiny notes, vouching notes. And today, do we need to have all that physically in paper? The other day, this year, after my chairmanship this year, I'm bouncing back into some of the audits which I have delegated or shared with my partners. And asked a student for a girl student to get I want to have a look at your registry scrutiny notes. She comes with the laptop and saying that, sir, it's in the client's folder, but for quick reference, I brought my laptop. These are the registry scrutiny notes. It's in an Excel sheet. We don't have to take a printout of that and keep it as a printed. Hard copy is not required. But this should be properly backed up. And the client folder, each client folder, these notes could be there. And there should be proof that this has been verified by the partner or the audit in charge. So that's about audit documentation. Sufficient, appropriate, the documentation enough to establish that the audit has been done properly. 240 is fraud, not a very regular standard. But if there are situations where frauds are possible, vulnerable to fraud, situations which are vulnerable for fraud, auditor has to do deep dives. Cannot remain superficial on top of this thing. You have to do deep dives and only then do this investigate until he is able to confirm, yes, there has been a fraud. Or dispel his doubt. That is only there. This discussion happened. That's it. That's over. Auditor's responsibilities relating laws and regulations. This question often comes up when we do an audit. Is the auditor required to ensure compliance with all the applicable statute? It could be labor laws, it could be GST, it could be. So the answer is no. FEMA, it could be FEMA. The answer is no. But if it non-compliance, if any, which has an impact on the accounting function, the audit function, the auditor should take extra care. And if there is a liability or a demand has been raised, an admitted demand, it should be essentially provided for in the books. Accounting hit should be taken. If it is only a possibility, disclose it as a contingent liability and so on. You don't have to do it better than me. That is about the 250. 260, I did mention. That is internal control evaluation. Communicating with those charged with governance. In the COVID situation, one thing there, the institute publication on COVID-related publication says that the auditor should threadbare discuss the COVID situation, its impact on the business of the client. That's very important. And we call it audit observations in our office, where we do statutory. It's not internal audit. As a statutory auditor, we come across certain lapses, certain control lapses, certain documentation lapses, quality of people, including technology lapses. Backups are not there. Many of us have experienced this. September 23rd, the accountant would stand up and say that hard disk has crashed. Some rat or lizard would have got into the CPU, and then that some problem has happened and the hard disk has crashed. Do we have a backup? It's not there, sir. It could be deliberate also. One has to be careful. So here, when we are discussing the standards, I may sound like saying that, Jomon, are you advising us or telling us to approach every audit situation with a lot of suspicion? I would say partly yes. We are taught that the auditor should not approach an audit with a preconceived notion that there will be a lot of things which are not in, there are a lot of problems. But the corollary of the theory is the auditor also should not approach thinking with the comfort that everything is all right, everything will be there, everything is fine, no fraud, no irregularity. That also has to change. Kingston Cotton Mill's case, he said that the auditor is only a watchdog, not a bloodhound. But I think a via media approach has to be taken. That's why I mentioned about the doubting Thomas. So this has to become a good practice, communicating with the management in writing. I have a slight throat problem. That's why I'm sipping a cup of tea. Communication with those charged with governance should become a regular practice. Written. 299 joint auditors is not very common, but the point to be noted here is that joint auditors, if there's a joint audit, I did my articles with a firm called Varma & Roma in Chennai, and we used to have a lot of audits in Bangalore. There we had some joint audits. So before the audit is started, the partners of both the firms would sit together, do the work allocation to avoid duplication and overlaps. And based on all that, the execution is done. Periodical review is there. Some audits used to take 1.5 months. There are the audits which we were in, I remember, Car Mobiles, Rana Group, Bangalore, Pina factory was there. So we were there for almost 45 days. Team of 4 or 5 people from both the firms. I think it was Shankar and Sundar, if I remember correctly. They were there, and we used to have this lot of interaction with them. And also discussion. Final point here is the joint auditors do not have to concur, come to a consensus on the opinion. I can have a qualified opinion, whereas the other firm feels that qualification that can be we can give a clean sheet. Sometimes I say, sir, there are so many qualifications, sir, should we not make it adverse report? Financial statements does not give a true and fair. We have issued so many of them in Kerala now, in my practice now. Okay, state government company, there are a lot of issues. We issued a adverse report and also escalated the matter to the minister, department minister, who's the chairman of the company. We separately wrote to and he called a meeting for the senior people. Lot of things have been regularized. But still, the report of 1819, not 1920, 1819, which is being discussed and finalized course of next week, we are still issuing an adverse report. If things are really bad, we should issue an adverse report. It is not that every opinion is saying that it gives a true and fair. The bottom line is the audit report should not be a mechanical copy paste from the previous year. SA 300 planning the audit of financial statements. Sir, how many of us have an audit program? For corporate audits. See, it's like an instruction manual. We work on a mental plan. It is not effective. And the audit program, a well laid out, planned audit program. And let me also say, there is no fit-all audit program. An audit program which I use in Tirupur, for example, for a hosiery making company. That audit program will not be effective when I do the audit of a stockbroker. Audit programs have to be customized. Service industry, today service industry, lot of considerations. Separate. Manufacturing and trading, service, we have separate reports, audit programs for different kinds of businesses. Technology companies, what are the stockbroking companies, what are the special points? So general points and then company specific or industry specific, vertical specific points you have to have, and a written audit program. And finally, it is signed by the partner. The student's work is also reviewed based on that. We have a weekly reporting system. So action point is, I will have an audit program. Just Google up, you will get a lot of audit programs. Or if some of you want, I can share. There's no problem. I'll leave my email ID towards the end of the presentation. There's no IP in it. I don't see there's a huge intellectual property. A lot of work, thinking has gone into it. Drafting an audit program, making sure that the proprietary part of it, right from the appointment letter. Knowledge about the business, very important. The student is asked to prepare a general note, the audit assistant is asked to prepare a general note on the business of the company. If there are any new business models. A housing finance company today might diversify into vehicle financing also. There's a lot of NBFC culture in Kerala and Tamil Nadu. So there we have to customize and continue to do it. That's very important. Audit program. SA 315, identifying and assessing the risk of material misstatement. That is audit risk through understanding the entity and its environment. So, sir, audit risk is the risk of expressing an inappropriate opinion, saying that all is well when it is actually not so. The other way is not possible. Sometimes people ask, sir, what if we say things are not good when it's actually good? It cannot happen because any qualification adverse opinion has to be given with the reasons. Like, for example, in the earlier case where I said about opinion about a girl, if I say that no, she is not good for this proposal should not be considered. I should say because this girl had, or this boy had, or boy is like this. So the reverse will not work. So the risk of expressing an inappropriate opinion is the audit risk. When financial statements are materially misstated, financial statements are incomplete to the extent that there are material omissions, a lot of transactions were not captured, assets were left out, liabilities were concealed. So true and fair was not there. In all that situation, without doing a proper audit, you issue a report saying that the financial statements give a true and fair. See, the auditor is an opinion maker. Auditor financial statements are relied upon. So that is a key point here. And for that, assessing the risk, the auditor should have very good understanding of the entity, its business, and the environment in which it operates. The standard talks about entity-specific knowledge, that particular ABC Limited, ABC Private Limited, about that entity, then the industry to which it belongs. Then thirdly, the larger macroeconomic environment. Today, the economic environment is so badly affected. Huge shrinkage is expected in the global GDP as well as India's GDP. Businesses some of the businesses volumes are less. Restaurants have very, very little business. Resorts are all closed. People are scared to go. Some places there are still restrictions. Air travel is not there. Travel agents, unfortunately, have been badly grounded, if you borrow a term from aviation. A lot of businesses that way have been affected. Our experience shows that tech companies, we have a few mid-sized tech companies with a turnover, let's say 20-25 crores. EduTech companies have not been affected. In fact, they have grown during this period. EduTech. All this e-learning or online classes have become the new normal. It's a new term. It's the new normal. Work from home is a new normal. India's largest IT company, TCS, which has 450,000 employees on its rolls now, have found that working from home is more effective. It was found that there is 15% more productivity when the staff work from home. I don't know what are the parameters, which it has a lot of social issues with mental health, issues with the domestic peace. Lot of cases have been reported. Sir, I need to charge my phone. Just a minute. Sir, hello.
Sir, audible.
Audible. Okay, fine. There's some connectivity issue. Is the slide visible?
Yes, keep on booting, sir. Just a minute, sir. Yeah, visible, sir.
Audible also.
Yes, sir. Definitely, no issue at all.
Sorry for the slight interruption we had. So back to this work culture which is changing. Work from home is a new normal. Online learning. So there the companies which were there, the edu space, like for example, Byju's, which is there's a huge name. All of them would stand to gain because online learning is the thing. Even school education, primary education, small kids, KG students are sitting with their parents in front of a laptop, or so those are the new normals. So with all that work from home, this business models are substantially changing, becoming more dependent on technology, leveraging more on technology, and so on. So let us have a good understanding of the entity. The audit team should be briefed about, or they should themselves prepare a note on the business of the entity. Only then they should do the audit properly. 500 audit evidence. So I said in SA 200 talks about sufficient appropriate evidence. Auditor should collect all that is required evidence. It could be visual evidence, it could be oral evidence, seeing, hearing, and then written evidence. Written evidence is the most reliable. External evidence to the extent possible. After the Satyam issue, many of the big firms are collecting bank confirmations directly. It is not even routed through the client. There should not be transmission loss of evidence. Confirmations are external confirmations, SA 505, the third bullet point here. We are not insisting on confirmations from debtors and creditors. Recently, we had a case where a client of ours, they have a contract with a particular hospital, and they're kind of about to terminate that contract. So when you ask for the balance confirmation, the receivable from that hospital, this is a medical consulting company by a very renowned doctor. And there they're saying that the confirmation, the relationships are not very good. We are kind of going to terminate the contract. And there's a receivable of about 70 lakhs as on 31st March. But then I said the finance manager and one of the directors who's very actively involved is a retired bank manager. He called up and said, sir, the amount has subsequently been received. We can verify the bank statement and the 78 lakhs or whatever with the TDS and all that has been paid in April, by April 21st or so. Bank transfer had happened. We said, okay, that is proof enough. This 31st March confirmation document, even if we collect that, has actually been received. We had proof that we verified and noted those details and copy of that bank statement. With that, we satisfied ourselves. So, a lot of requirement on collecting evidence, relevant evidence has to be insisted upon. As an extension of SA 500, we have 501 audit evidence, additional considerations for specific items. Other one, there are 3 items. One, physical verification of inventory. When was the last time we attended physical verification? I'm not saying that everyone is not doing it. Some of us are not doing it. We're saying that, okay, client will do it, may do it, all those things. That's not enough. Large value. Today, if you verify balance sheets, many balance sheets which I scrutinize, I'm seeing non-existent inventory sitting in the balance sheet. There's nothing is there, but balance sheet is a huge amount of inventory. So the standard says, as an additional consideration, you should give trust on audit evidence on physical verification of assets and inventories particularly. Second point is not applicable in many of our cases. Second point is segment reporting. If there is segment reporting required as in Accounting Standards 17, then the auditor should spend time, understand how the segmentalization has been done. Business segments, geographical segments, whether the disclosures are proper, reconciliations are proper. That is on the third one is on the legal issues, suits filed by the company against the company. What is the status of the legal proceedings against the company? These 3 things are calling for additional special considerations by the auditor. I'll share with you a very recent experience. Very recent experience that 2 weeks back. A friend of mine who is, I'm a Rotarian, Rotary friend. they have a company here, and that company has been taken over by a larger company. They are planning an IPO. They are hello. Hello.
Jomon, sir.
Yeah.
Connect.
There's some.
Interrupted. Audible, sir.
Okay, fine. I can continue.
Not in proper time, sir. Little struggling going on. Yes.
Is it a problem at my end?
I don't know, sir, exactly. Slide visible, sir. This right now is slide is like visible.
Yeah.
Okay, you can start, sir. No issue at all.
But audio, what about the audio?
Audio, okay, sir. Video is not streaming in your face. Video is not streamed, but PPT is streaming.
Oh, just give me a minute, sir.
In case any communication problem means kindly close your videos, sir. There is more than enough. It will consume huge data.
Yeah. Let me see.
Your audio is more than enough for us.
You don't want to see my face, is it?
No, sir. No, not like that.
Okay, let me stop
In
my
case
video
you
for a
are facing
minute.
the communication problem means that is one way of solution, sir. Not like that.
I appreciate it. I was just joking. Now it's audible. I'm not visible, but audible.
Audible, sir. Audible. PPT also visible. No issue at all.
மலையாளத்துல அஷரீரி சொல்லுவாங்க சார் அஷரீரி தமிழ் அப்படி ஒரு எக்ஸ்பிரஷன் இருக்கா தெரியாது
In few days we are facing some issues, sir. Some network issue or some data issue is there. This is one way of solution. Normally,
Yeah.
video is taking huge data
Sharavanan sir
consumption.
has approved. Sharavanan sir has said, please go ahead. Well, so this experience I'll share with you. So this company has been taken over by a company which is pan-India presence. They are audited by a firm, Bartley Boy from Pune. And my Rotary friend who is the managing director of the Kerala company, he asked whether I can find a firm to do the physical verification of stock because the partners or team from Pune cannot come travel. I said, how big is this assignment? If we can do it. And finally, we did the assignment. The kind of communication which happens, there is a specific reference to SA501 by this particular form, 3 contact numbers given. And the first thing we have to do after going for physical verification is my partner and 3 of our assistants men stand in front of the factory and take a selfie and mail it, WhatsApp it. That's the starting point. Then the entire process was live stream, videographed, and then it was being watched by somebody in Pune. They gave 15 items of raw materials and finished goods. And on top of that, they wanted us to take 10 items at random, raw materials and finished goods, and prepare detailed reports. The whole thing was being viewed there. That is the skepticism one should exercise. They're thinking that, okay, the managing director is appointing a firm whom is known to him. They might collude, it can happen. So whether actual physical verification is taken, items were selected by the statutory audit team from Pune because they had done it last year. And the entire process was live, seen by somebody sitting in Pune. That is how it was done. It was a different experience, and we said that we should also seriously look at improving. We are not able to physically reach out. How do we do it? And this has been a very classic example of SA 501 being complied with. 505 external confirmations. That is bank confirmation is the only thing we ask for. That also sometimes we do not. Confirmation should be obtained for materials held by other parties, consignees, agents, documents held by bank, original documents. When you ask for a title deed, a sale deed of a property, the management would say it is with the bank. We have only copy. So get a certified copy and get a confirmation from the bank that they are holding the original of sale deed for property for that extent under survey number, etc., etc. 510, we did discuss initial audit engagements, opening balances. That is what we said, the land particular case where we got the new audit and we are still yet to get the original title deeds. Analytical procedures, I did mention in the first few slides, if you remember, we call it analytical procedures is the ratio analysis, trend analysis with your knowledge of the particular business, the entity, and all those things. Audit sampling. So audit sampling is, I should confess that we are not doing very, very systematically, except that we have a random selection, a lot taking in the case of deciding on transactions and the period which has to be audited. So 1920 audit when we do, if you take a period of 12 months as the universe, and if you say that I'm going to do 2 months of vouching or verification or whatever, ledger analysis accounts we'll take. From out of that, assets, liabilities, income, expenditure. Sometimes 100%. Smaller companies, you can run through the entire ledger. So vouching, which are these 2 months? Is it April, May, or April and March? Is it November? Like that. So we have the practice of drawing lot. That's the only thing. But good audit sampling, larger firms, what they're doing is that they use even random number tables to make sure that the samples selected are random. The randomness of the sample selection is proper. And the standard says that your selection process should be defensible. So tomorrow there is a dispute or there is a charge of professional negligence. You have to say that I have selected such and such sample of such and such size using statistical method, scientific random sampling. That's what they're talking about. But frankly, I'm not fully practicing it. Only the selection through drawing of lots that we do. But that is a requirement of the standard. Related party transactions. One has to be extremely careful in dealing with related party transactions. Across the globe, everywhere, every enactment sees related party transactions with some amount of suspicion, with the disfavor. We know what happened in Sahara. Sahara had 500 private limited companies. It took money from the public, from the financial institutions in the parent company, and siphoned out all these funds through 500 private limited companies. That was one reason for the Companies Act 2013 being very, very draconian, difficult when it was originally enacted in a hurry. So Sharda scam, Satyam scam, and Sahara scam. 3S are said to be the reason for that kind of new lot of changes, but those are all being simplified now, the Companies Act, because when we talk about a corporate law structure in the country, we are also concerned today about ease of doing business. Those who are in corporate law practice would know, initially when 2013 Act came, even for the managing director going to the washroom, we had to file MGT 40. All those requirements have been done away with now. And SPICE form today, incorporation, name availability, all your GST registration. Now IE code and PF ESI will also be registered in there. PAN, TAN, single application, SPICE form. So related party transactions, irrespective of that, related party transactions under the Companies Act, Section 188, puts a lot of restrictions. And about the 189 register, all these companies have to maintain 189 register under section 189. Related party transaction not encouraged. Income tax. I moved away from tax practice. Last 10 years, I have not been to income tax office, except for some pleasantries or for some internal meetings there as a regional council member. And except for one case, which is a high stake case of 197, lesser deduction, where the jurisdiction got shifted to Bangalore. So I accompanied my partner and we got the rate. Foreign companies, foreign companies, the TDS rate is 43.26%. That's the residual rate. So this is a contracting company, which is impossible to carry on business with that kind of TDS on the gross, not on the profit, 43.26 on the gross revenue. So we got it reduced to 5% for the client. The saving that year was 32 crores. And so other than that, so I moved away. So tax practice, again, I'm talking about specialization. Jack of all trades is not required, but a master of one is required. In the same form, there can be different masters. So 48 2B of the Income Tax Act, Accounting Standard 18, related party disclosures. Now SA 550, related party transactions, audit considerations. They even talk about a separate letter of representation. Related party transactions have to be fully listed, identified, got certified, verified for the reasonableness, and wherever required, accounting standard, it has to be disclosed properly. 560 subsequent events. This has got a lot of relevance in the COVID context. We went into the lockdown towards the end of March. April was a total closure. No business, nothing other than essential services and medical services. That also very limited. Private hospitals were reluctant to admit patients. So subsequent events, whatever events, adjusting events which throw light to the 31st March situation will have to be taken into account and provided for 31st March. You have evidence that many of the debtors have disappeared. They have closed the business and they have no way to continue. So should we not provide for, if not a write-off, the receivables? Inventories. Many of them have deteriorated in quality. And if it's a pharma industry, many of the medicines would have got expired, and they cannot be used. For disposing them off, you may incur a cost. That kind of bad situations are there. So subsequent events, there's a separate publication. I'm coming to that towards the end of this presentation. SA 580, written representations. Sir, this is a very, very important standard. We call it LOR, letter of representation in our office. All the important points which are discussed, that all liabilities are provided for, asset valuations have been there, internal controls are there. If it is not there to that extent, all these explanations should be got in writing from the management. That is what is required in SA 580. Kandipa insist pannam. So action point here is, I will insist on an LOR. Let us recall SA 210, where we said I will insist on a letter of engagement. That's the starting point. This is part of an audit roundup. By the time the final discussions are over, before a signed balance sheet is signed, on the date of the balance sheet date or a few days before that, we get a letter of representation from the management. Using the work of an internal auditor, from a statutory auditor's viewpoint, the internal auditor's work is complementary for his work, and he should use the internal auditor's work properly, communicate with him, refer to the reports. Based on that, he can decide on the extent of checking. If it is not effective, we should discuss and management audit committee meetings and all that. We have a lot of audit committee meetings where we either a statutory auditor or internal auditor, we discuss with them, and there's a good interaction. And the statutory auditor should ask the management to ask the internal auditor to share a copy of his report, periodical report, to the statutory auditor with the consent of the management. It becomes documentation for the external auditor or the statutory. So now this standard, we have come to reporting now. SA 700, forming an opinion and reporting on financial statements. I put it in a tabular form. SA 700 revised. This is in place for the last 2 years. New format of the auditor's report. Old format is on the right-hand side. Revised, you see title, addressee, and straight away it's coming to the opinion. Only after the opinion, it says basis for opinion, basis for qualified opinion, basis for this thing, all that is there. Going concern, they have planned it specifically. Going concern is there. If there's a going concern issue, the auditor has to really highlight and it should pick up part of the main body of the report. Key audit matters, KAM, some of you may be aware, that is SS701. Key audit matters for the time being applicable only to listed companies. But if you read the standard carefully, it says that or in situations where the auditor feels that a KAM reference is warranted. Last year, if you see the annual reports of large companies, many of the auditors' reports have a separate tabulation. Pudu tabulation is there, where the key audit matter and how the auditor has addressed this. So, key audit matter is a certain audit situation or audit discussion. If the auditor feels that he had with the management, and kind of satisfactory explanations were given by the management, and that he has to highlight in the auditor's report. And KM requirement. Listed companies are started giving this, but where they're required, we can give also, but it is not mandatory. Management's responsibility, as we have been highlighting, it is all that of the management. Auditor's responsibility is to do an audit in accordance with the standards issued by ICAI, requirements of the Act, and express an opinion on the financial statement. Other reporting responsibilities, 14312 fraud, other things, IEPF, all those things. And then, of course, we have the CARO also. Signature, date, place. One thing is missing here. I purposely not mentioned that. What is that, sir? Can some of the younger members unmute and speak up? What is missing here?
Internal financial control, sir.
IFC will come under other reporting responsibilities. Internal financial control also now the smaller companies are exempted from the requirement of, while they say internal financial control, institute said it is ICOFR, internal controls or financial reporting only. So institute says that it should not be pulled in to comment on the entire internal controls. Instead, internal controls or financial reporting only. That is there. Along with signature, date and place, something is missing.
Paragraph and other matter paragraph.
No, that is there. That is applicable. SS 706, Mr. Tamil Mudan is talking of. That is not what I'm still expecting. Something very important, without which an auditor's report should not be issued. Sir, I'm talking about UDIN, sir. UDIN has to be there. Every auditor's report has to be there. Statutory compliance, yes, that is all fine. UDIN. So before the auditor's report is printed out, make sure that we generate the UDIN. And UDIN, there is a system generated tabulation, but always have also better to have and you should use your phone only. The OTP should come to your phone only. And then based on that, issue periodicity and profit balance sheet details. That will all come in the introductory part of it, sir. I'm getting a lot of response. Good. So no certificate, no auditor's report, no document from an auditor's office, CS office can today go out without the audit. That is our identity. That is immunity that insulates us from unscrupulous operators who might misuse our name, seal, stamp, and all that for their own purposes. Key audit matters, briefly we have discussed. 705 tells us how to qualify an auditor's report. Modify. So, adverse opinion, saying the financial statements do not reveal a true and fair view, except for the term earlier on we used to have subject to. Now, except for matters specified in the basis of qualified opinion paragraph, the financial statements give a true and fair. 1, 2, 3 points are there. That is qualified opinion. Third one is, I say, washing hands. That is a disclaimer. The three types, all that is covered under SS 705. As our friend said, emphasis of matter paragraph or other matter paragraph in the independent auditor. Emphasis of matter is something a little less than an audit qualification. That's an international practice. The auditor has to feels that certain things have to be highlighted to the users of financial statements. And it concludes by saying that he says such and such things emphasis a matter. Our opinion in this matter, our opinion is not qualified in this matter. That is how emphasis of matter paragraphs have to be used. Now, there is some confusion about emphasis of matter and key audit matter. I hope in the points we have discussed in the last 5 minutes, the difference between key audit matter and emphasis of matter is clear. Quickly, once again, key audit matter is a matter or a point which is a particular aspect which was discussed during the course of the audit. Very important aspect which the auditor had some doubt on or inhibition on or some apprehension on. Discuss with the management, and management has given kind of satisfactory explanations. But this standard says that even in that situation, what is the issue, how you have satisfied yourself, separate you mention in the auditor's report, that is key audit matters. Emphasis of matter is an unsatisfied part of it. Unsatisfied with something, but not to a very grave extent that it calls for an audit qualification or adverse opinion. That is emphasis of matter. So with that, we have covered most of these practice-based standards. Now, quickly moving on, in the next 10 minutes, we'll conclude. Accounting and auditing advisory, impact on financial reporting and auditors' considerations. That came on 27th March. Going concern, key considerations for auditors amid COVID-19. Physical inventory verification, key audit considerations amid COVID-19. Auditors reporting, key audit considerations. Subsequent events, key audit considerations amid COVID-19, 23.5. So these are the COVID-related pronouncements of ICAI. Those who are doing major audits, I think all of us should run through this at least. Some key points we'll discuss now. Potential issues for entities, particularly those who are operating in geographies that are significantly affected. Except the real rural India, the villages of India, most of the geographies where businesses operate have been affected, disrupted, and very, very adverse impact. So talk about auditors shall evaluate additional risks arising from the following areas. Operational disruption, drop in demand, reduced customer base, employees' absence, contractual non-compliance. But here again, we have been discussing again and again, if for some reason, because of the lockdown, certain contractual obligations could not be honored, I think that will come under the force majeure clause. When we draft agreements for our clients, force majeure, act of God, beyond the control of you and me, human beings. So I think this will qualify for force majeure as a situation unprecedented. So that is a force majeure clause. Some people say it is not act of God, it is act of China. Debate is still on. We cannot comment on that as of now. Liquidity and working capital issues. There is a liquidity huge problem. Working capital, but then that is why we have new government schemes. 20%. I hope most of your clients have sensibly availed that emergency credit line, 20% of the outstanding. Even if it's an NPA, they are supposed to give. Public sector banks disbursed more than, as of now, about 60,000 crores. Private sector banks are a little reluctant. They have reached only about 40,000 crores. Last week's business line had the right statistics. So the news which are coming in is, so whether there are working capital issues, funding has to be there. NBFCs also sensibly. And this guaranteed emergency credit line, GECL also, that got only 9.25% of interest. If it's a bank, maximum 14% in the case of NBFC. That is what they should try to avail. Asset valuations. This is a huge point, a huge point. Many of the asset valuations have to take a beating. I personally feel that the business valuations, particularly driven by these newly invented methods, are very unrealistic, and valuations are overdue for a revaluation. All these Uber, Flipkart, all these investments happening, and now Reliance Jio has got with Google Sundar Pichai, Chennai born Sundar Pichai. Like Ilayaraja song, once he changed the lyrics and the Tamil part is the Nammur. So he sings software in the number one yaar Nammur Karnilya. So that is Sundar Pichai has invested so much, close to $4 billion US out of his plan of $10 billion US for India in the Indian digital space. And first time in the history that Facebook and rivals, arch rivals, Facebook and Google are investing in the same company, Reliance Jio. That's going to be a huge gain. But then Flipkart and all that has never made profits. How they would get that kind of a valuation, I have always doubted. I'll just share something which I have in about what Warren Buffett says, who is the most wisest and richest investment banker. Certainly would not buy a business for $25 billion. Warren Buffett on Lyft IPO. Lyft is like Uber. Speaking about the ride-hailing major Lyft's IPO, world's fourth richest person, Warren Buffett said, I certainly wouldn't buy a business for $25 billion. He said $25 billion. He said the business should earn $2.5 to $3 billion pre-tax in 5 years to even be on the same radar screen as things one can buy for $25 billion. So he is talking sensibly still about $25 billion, 8 to 10%, 10 to 11% pre-tax ROI to be worthy of investment. So new models are changing. So those kind of very unrealistic valuations may have to be reviewed in the backdrop of these recent developments, particularly lockdowns and how businesses will shape up. Some business models will have become very, very ineffective and they will have to be discontinued, and transformation is the key. That is the only way they can change. I did mention SA 315 320 talks about auditors should also discuss with those charged with governance and management the impact of COVID-19. Specific accounting issues, impairment of goodwill, property, plant and equipment, receivables, valuation of defined benefit plans. This is EIS 15, employee benefits. You have to be very careful. Look at the third bullet point, employee termination benefits. If, for example, March after the lockdown, if you're planning to retrench, send off large number of employees, which means that your gratuity liability would have actually materialized. And if you have made a provision, if it is not funded, where will the funds come from? How much should be extra provided for in the financial statements? Whether actuarial valuation was taken, all those considerations. Onerous contracts and penalties. Auditors should use procedures as prescribed in SA 540. SA 540 is audit of accounting estimates, useful life of assets, all those things, realizability of debtors and the past experience based on that accounting estimates. Physical verification other than financial statements date. That is what we did. I shared this recent very practical live example. You see that physical verification could not be done on 31st March. So this firm had asked us to take the stock as on this thing and work it back out through the stock records. The entire thing they were in SAP, so it has to be worked back and the 31st March stock has to be arrived at. That reworking all of us will have to attend because physical verification not attend. Subsequent events and going concern goes without saying are major concerns. Get external confirmation is very important because debtor may not be there. These situations where people would like to cover up and say that things are all fine with me. As a risk of fraud can happen, management fraud. Return representations, already I mentioned, SA 580, we should get all that as possible. Going concern, very, very detailed discussion. What is in red letters, you can read. A reference should also be made to the implementation guide to SA 540. IG solluvaanga. Implementation guide to SA 570, going concern, issued by the AISB. In seeing whether going concern concerns are actually there. Going concern actually is an accounting assumption. Consistency, going concern, and accrual are accounting assumptions. But going concern cannot be a safe assumption at this point of time. If there are signals that the business may either be closed, or volumes would be substantially will have to be curtailed for factors, external factors imposed by this very unprecedented situation, then whole financial statements analysis has to take a completely different. Even fixed assets may have to be written down to realizable value, cost or net realizable value, whichever is lower. The inventory valuation cardinal principle may have to be extended to the fixed assets. Proper, we don't call it fixed assets now. Property, plant and equipment, PPE, accounting standard 10 has been renamed from accounting for fixed assets to property, plant and equipment, in line with the international practice. This is making a reference to SA 501, that is additional considerations for specific items. Also refer implementation guide to SA 501. And look at the last paragraph where it says that with all this, the auditor is not able to understanding the practical difficulties of business that has happened. Audit opinion still remains based on those factors. And the client may be in a helpless situation, but that should not give us a thinking that we need to client support him. So in where satisfactory explanation could not be obtained, auditor should modify his opinion. Audit reporting that we can go run through. Proper disclosure of financial statements regarding the impact of management's assessment, including impact on going concern that we discussed. So, my dear colleagues, I think almost time allotted to me is kind of over. So, before let me, we'll have a Q&A if time permits. I leave it to the two chairmen and one chairma or chairperson, Bhargavi. Quickly, 2 minutes on certain things which I always share when I interact with the members. Last year, across went and could meet. Europe, I could not come. Infrastructure and technology. Technology is today driver. Some of us are still not using technology, leveraging technology. Technology will take us forward. Only technology will take us forward. Good people and processes. I did mention in the backdrop of the SQC1. Develop a good team. See, I have four partners in my office. All of them were my students. So those who were resourceful, those who were kind of inclined to practice, lot of mentoring had to be done. And my junior most partner has now, I prompted him and he will start taking classes at the Ernakulam branch. Qualified just 2 years back. It's a lot of time has to be spent on people, students also. Initial days, if you mentor, take time to train them, then this will auto process. Retaining good people, very important. Retaining talent, very important, without which we cannot grow. All these slides are relevant. I would like to quote Manoharan sir. Manoharan sir, in one of his presidential messages, when he was president, I always read this president's message every month. Then saying that what are things I'm going to say now is relevant only for our members who still believe in growth and progress. Billing and collection is one thing which prompt billing. One senior chartered account question was just discussed, had called me 2 weeks back and casually made a remark, Jomon, last year, after the tax audits were finished for some reason or the other, we kept the billing pending and the billing was done only in February, end of February. And all that is remaining as receivable now. Audit year over, I don't know, last year was it October or November? Immediately after that, billing has to be done. Ours is a service industry, but ours is not a charity organization. Agree upon the amount, bill promptly and collect promptly. My firm's bill carries a statement. All our bills are payable immediately. Even with that, there are some delays. But as a percentage, if you see last year's turnover, it is only 2% receivable, which is there. And that's also we are collecting. In spite of this, we are, partners will personally speak to the clients and doing the collection. Without what's the point? No charm in writing of bad debts by a CFO. We are high priest in the religion of financial discipline. We cannot have bad debts. So do collect. Sir, financial planning, I said when the lockdown came, what were the resources? Do we have reserves? Rent has to be paid. Stipend, we continue to pay the institute stipend. Now, normal stipend is almost 3 times that. Minimum stipend at least had to be paid. Staff could not be retrenched. We retained them. April, we paid 80% salary. All other times, we pay full salary. Revenues were not coming in. Execution was not happening. So the turnover in terms of completing work and collections were not happening. So we have to do that. Also, personal financial planning. How much of term insurance do we have? Medical insurance. A few years back, I was addressing members in Gundur. So I asked this question: how many of you are insured for more than 50 lakhs? A senior member got up and said, "George, very good question. Small correction required. You ask how many of you are insured at all." Lot of planning, lot of reserves have to be built up. We live in a very fast world. And lot of changes we can happen, sir, in a professional attitude and even attiring ourselves well. And to my younger members, I'm very vocal on this. Do cut down on social media. It eats away a lot of productive time. I served as SIRC chairman last year. I still do not use WhatsApp. I do not have a Facebook account. But I strongly believe that I have a face. I'm always accessible. Because I did not have WhatsApp, I would have missed out on certain information, but that I think is not. If I'm to be informed, there are ways of informing me. If I have to be contacted, I have never made a friend on Facebook. All my friends are we meet, we sit together, we chat. That is where Satya Nadella himself said, working from home cannot be a permanent future. Let us not burn the social capital. Social capital is a term used. Who is talking? Satya Nadella. So that is the situation. Microsoft CEO. Students are friendly atmosphere. Sir, I always say our offices are a different form of a Gurukul system. The students come not to work, not only to work. The students come to learn. And then whatever we do, there are 10%, 15% dissident students. New gen have their style of doing things. But then essentially a good student culture, academic culture, lenient work schedules, decent stipend, giving leave for exams, avoiding late sitting, working in our office last 2 years, 6 o'clock lights off. Except when the students go for outstation audit. We have some audits in Hyderabad. A small audit in Salem also where the students come and where if it's completed, maybe 1 or 2 days, that is not beyond 7:30. No way. How many of us sitting through the night and not billing also? GST, we are doing a lot of clerical work for the client, unproductive. While we are working late, filing returns, matching GST forms, the client is having a good time in a club. His accountant may be having a fun time elsewhere. So that has to slightly change, and our organizations should become happy organizations. So infrastructure, good infrastructure, decent work environment, clean work environment. All that is very important so that we go back home happy. So with that, when we say if we decide to change is all hard at first. This is what Robin Sharma said. It'll be messy in the middle and so beautiful at the end. So looking forward to some interaction. Let me conclude thanking C.A. Balamurugan, C.A. Ramu sir and Bhargavi for giving me this opportunity of interacting with the members of these 3 very, very dynamic branches. Those branches are very close to my heart. Salem last year, we had 2-3 programs I could attend, including residential. So I developed a lot of familiarity with, if I may use the term, the all ladies branch. So I had a great time. Wish you all the very best. Stay safe, stay tuned, and also that we should become a future.